Let's take us through, for the record, what your stance is as a shareholder on Disney versus Peltz. Where do you stand?
Well, originally, I've been more in favor of somewhat of a breakup, right? I mean, when you look at the real estate and the parks portion of Disney, that's the one that has the lower PE. And really, the growth aspect of things would come from areas such as the streaming business and communication services. Now, I think what at least has been accomplished in all of this is that, Peltz is basically saying, let's get serious about streaming here. It doesn't have to always be just about a Disney brand, Star Wars, superheroes, cartoons that lead into, business for the parks. If we really want to be a streaming business, we need to broaden this out. And it looks like at least he's gotten a voice here that's going to sort of accomplish that. And it seems like Disney's trying to shift and really get serious about what the streaming business is all about.
Does that mean that regardless of the outcome here, you feel as though you're comfortable with Disney's direction going forward?
Yeah, I am. And actually, they mentioned basically Iger saying that maybe they would nominate the very first woman CEO in Walden. And she comes from the entertainment Hollywood side of things, right? And so she would probably be in place to sort of guide this streaming business to higher levels. When you look at Netflix and the PE that it trades at, like around a 35 versus, forward looking versus something like a Disney at 25, and yet Disney's revenue is 2.5 times that of Netflix. I think if they can really get serious about sort of branching out the programming here and really developing this streaming business beyond just the Disney product core itself, then I start to feel more comfortable about where this company is going.
This boardroom battle has highlighted a number of issues, including Bob Iger and CEO succession. You mentioned some of the names being thrown about as possible candidates to succeed him. How much of Disney's future with somebody at the helm other than Iger plays into your investing thesis about whether you should own this stock longer term?
Well, I mean, I would like to see it go Hollywood. I mean, I want to see that this is going to be more than just, boom or bust around a Star Wars brand, and that the streaming business between ABC and Fox and ESPN and all of that becomes a conglomerate which people feel comfortable and have enough choices and selections to make that this is a real streaming business. To me, this is just Disney Plus is not really Plus yet. It's got to go beyond that. And so if we see that develop, then I feel like, hey, the multiples on this stock can go a lot higher. Now, technically speaking, this 122 level, this was sort of a target that we expected. We started buying the stock when it was down around 100. And so there's going to be a little bit of resistance and overhang from all the sell-off that's occurred from a technical basis. But maybe if we can sort of work our way through this and we get the right people in place on top, then, Disney's got a lot more upside. All
right. Really quickly, Brian, Disney, we know you own it. Are there any other media properties you would own, given some of the carnage that we've seen in valuations?
Yeah, I mean, the valuation carnage has been real. Look, I mean, when we talk about real estate properties, entertainment, consumer discretionary, it's been a tough sled. Really, you've got to go to the top mega cap type stocks in consumer discretionary, the Home Depot, Costco's, those kind of value plays is where we're really sticking to rather than other entertainment sections. So, a Netflix and a Disney's probably the two communication services I like. But, beyond that, I'm looking more at those core consumer big cap kind of names that have been the winners over the last year and a half.